Hello, and welcome to another update video about ADA. Yeah, here on the ADA chart, the market pushed higher overnight. In my last update, I explained again that I'd really like to see this third wave, the internal third wave here, that probably is still unfolding, reach the $1.08 level at least, yeah, or at least next, because, why is this important? Because we need to see further upside extensions in the internal structure to really keep up the potential or keep the potential high that the market is going to reach $1.20 in this third wave, which is my target, the first target for this third wave. Why is this important? Because when I consider the overall pattern, which started here on the 20th of December, we had this wave 1 to the upside, a potential impulse to the upside, which prompted me to add this wave 2 support area to the chart where the price then also reacted. But with this structure, a 1-2 setup, we could identify a target range for the third wave. Now, I typically like to show these fib levels here as well, but the 138% extension, as I frequently mentioned, is the first ideal target for this third wave of this wave degree. And if the market cannot even get to that $1.20 level in a third wave, it means that it might be that this is not a viable third wave, and then it's a constant... It's a matter of constantly observing the microstructure for signals that this potential is failing, right? So the problem is if the market isn't forming a clear structure in the subwaves, which indicates that we're getting there, that we don't have that confluence. But that's why I said we need some extensions, because imagine you have this 1-2 setup here, and then with this wave 2 that bottomed on the 30th of December, and then you have another tiny 1-2 setup here. Well, the third wave after that is not going to get us to 120 unless we get some significant upside extensions, which we see. So that's great. So because we can always get these extensions in internal third waves, the main approach is that we typically just track support in a third wave. And the support area has been adjusted based on the latest high. That's what we have to do as long as we are in this potential upside impulse. And the support area I communicated earlier today already on Discord is located between 95.9 cents and $1.03. Why is this important? Because this support area would be relevant for any pullback that happens now in this fourth wave. In an upside impulse, we don't want the price to break below the 50% retracement of the currently still unfolding third wave rally. This is just one of the characteristics of an impulse. Any break below the 50% fib level would typically invalidate an impulse. Yeah, it could then still be a diagonal. That's typically the first step of failing. And it would typically be an indication that something different is unfolding, maybe a larger correction or diagonal or whatever. But to keep this uptrend alive, we need to hold above that level, obviously, right? That's key. Now, again, this support area will be adjusted based on the latest high. So if the price pushes higher, we have to adjust this support area. And what's worth mentioning is that I pointed out resistance in this area, right? The 100% extension is typically, even though not really a target for a third wave, but for the internal third wave is what it was a target. But it's typically a key resistance. In addition to that, in the last update, not sure if you watched it, but we also took a look at the VRVP, volume profile indicator, and exactly here around the $1.08, $1.09 area, there is a key, let's say cluster of previous volume. So it's likely going to act as some, resistance here. Again, if the price pushes through, certainly there is some resistance there at the moment, just no major reaction. So if the price can break above, the next main area of confluence or historical volume is where the point of control is sitting around $1.20. So that could be the next key area of resistance, which would make sense because it's just above the, it's exactly around that 138% extension target, right? So it kind of is interesting how we can get confluence there between the VRVP volume profile clusters and the Fibonacci levels that really matter for this move to the upside. So I'd say if we get a break above $1.08, $1.09 now, and we're already trying, then 115 should be next because that's the next Fib level, but really it should then take us to $1.20 more or less directly. The support area will be adjusted along the way, and then there could be some strong resistance there. So that's how I see the ADA chart at the moment, definitely looking promising. Bear in mind, a break below 95 cents would be a first step to failure. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.